Hi. Inflation has been in the news both in India and globally. I wanted to give you a framework as to how to think about inflation in relation to stocks, companies, markets. Point one, which is very simple, that if inflation is there, that means that your cost of your inputs, let's say if you're making toilet soaps, the cost of the chemicals that go into the making of the toilet soap have gone up, and maybe the price of the toilet soap also has gone up. So for that company, the unit margin would have changed depending on how much the price of the inputs have gone up and how much the price of the product that they are selling has gone up. That is number one. Number two, there is a concept in economics called the price elasticity of demand. So if the price of a product goes up, the demand of that goes down. So if toilet soap is more expensive, maybe fewer toilet soaps will be sold. That is one part. But there's also a general impact. Maybe you have not even increased the price of the product that you are selling, but there is a general inflation. So for the householder, there is an increase in price of, let us say, food and wheat, edible oils, or maybe of petrol. So their budget is under pressure, and therefore they may postpone the purchase of something else, maybe a motorcycle, maybe even a shampoo. So that's the second impact. The third impact is on the balance sheet of companies and governments, because your debt is fixed in rupee terms or dollar terms, whereas as inflation goes up, for example, if your debt is 100 rupees, you are earning 20 rupees as a company or as a government as tax. If there's inflation, a 10% inflation, that 20 will go up to 22, but the debt remains at 100, so you are able to service that debt more easily. So that's the third impact. The fourth impact is because of policy decisions, because as inflation goes up, central banks around the world, whether it is RBI or the Fed, they increase interest rates in order to bring down inflation. And because as interest rates go up, the logic is that the demand in the economy will go down, and therefore inflation will go down. I have done a separate video on the impact of interest rate changes on market valuations. I'll give a link to that. So these are four broad parameters that you can use in order to evaluate the impact of inflation on companies, on governments, on markets. So I hope that helps.